and welcome to today's episode on financial planning. Today I'm going to talk about whether it is worth paying the repricing fee to reduce your home loan interest. Now in the last episode we saw how easy it was to reprice our loan downwards, but sometimes banks charge a higher fee to reprice your loan downwards. People sometimes pay this without really analyzing whether it is beneficial or not. So in today's episode we look at analyzing the interest saved vis-a-vis the upfront fee that we have to pay and see whether it works well for us or should we just ignore the offer that is given. Let's get to it then. Let's understand what repricing is and what the repricing fee is. Repricing a home loan is nothing but switching your existing loan within the current institution from a higher interest rate to a lower interest rate. So it's not that you're getting your loan taken over to another institution. It's within the same institution, but you're trying to get it to a lower interest rate. And for this, a repricing fee is often charged by the institution. So once you pay the fee, then they switch your loan to a lower interest rate. Now to understand the effect of repricing on our home loan, we need to understand how much interest we will save. And for this, we need to use an amortization chart. An amortization chart can be easily downloaded from the net and it looks something like this. Okay. An amortization schedule is a table which shows the total amount of EMI, the principal and interest component of each payment of EMI until the loan is paid off. So once you download your amort chart, you enter the loan parameters such as number of years or months, the rate of borrowing or interest, and the loan amount which you have borrowed. Now once you enter the details of the loan, then the formulas automatically calculate and throw up figures like this. So in this example, you can see that I've put a loan amount of 1 lakh, the rate as 8% and the months as 240 months, which is nothing but 20 years. Therefore, to pay off this loan of 1 lakh in 20 months at the rate of 8%, I will be paying an EMI of 836 rupees per month. Now, the first EMI that I pay will have two components, which is the interest and principal. Interest is 667 rupees and principal is 170 rupees, right? And so on and so forth. Now, EMI remains constant at 836, but the amount paid towards interest goes down and the amount paid towards principal goes up. An amort chart can also help you easily understand the cumulative interest and principal paid as on any given month. So if you scroll down to the end of the chart, then on the 240th month, that is the last month of the 20 years that I borrowed for, the EMI is of course the same, 836 rupees. The principal, the interest component is now 6 rupees only. The interest component is 831. And to pay off this loan, I have of course paid off 1 lakh as my principal, but I have paid off 1 lakh and 746 rupees as my interest payment. Let's look at an illustration of a home loan to understand this better. That is the impact of repricing with lower rate of interest and also by paying fees. So now let's assume that the loan amount and rate of interest which we took was 20 lakhs at 9%. And the repayment period was 20 years. Now, what is the interest payable over these 240 months or 20 years? That is 23.18 lakhs. Now, after 3 years, in the 37th month, the rate you negotiated it down to 8%. And then you calculate the interest saved. That will be about 4.52 lakhs over the next 17 years. And this means that you saved 4.52 lakhs and you also reduced your tenor from 240 months to 215 months. Sounds good, right? But that is over the next 17 years. Is there a real utility for that? So I believe that we should look at the utility part or the actual impact on our lives for the next 12 months or for maximum 24 months. So now if I was paying interest at the old rate, that is 9%, then over the next 12 months, I would have paid an interest of 1,66,000 rupees. But since the rate has now reduced, I'll be paying only 1,47,000 rupees. That means I'm saving approximately 19,000 rupees over the next 12 months. And if I take it for 24 months, then I would be saving 39,000 rupees, almost 40,000 rupees. Now this sounds good again, but there is a repricing fee that needs to be paid upfront to the home loan provider. Now in this example again, let us assume that the repricing fee is 10,000 rupees. Now I pay 10,000 rupees upfront and then I save 19,245 rupees over the next 12 months. That means my monthly save is actually only 770 rupees. So this is what I was saying, that the utility of this saving may not be much. If I take a slightly longer period, of course, my interest save will be higher. So if I take it over the next 2 years, it will be 39,000 minus 10,000, 29,000 rupees, which leads to a monthly save of 1,200 rupees, which is slightly higher. I'm not saying that this is low. I think it's worth it to go for it in this case. But let's not look at the amount of 4.52 lakhs over the next long tenor that we have left. It is highly probable that you will repay your loan faster, or you may sell your property. Now in the earlier example, we saw that the repricing fee was a flat amount of rupees 10,000. Now sometimes your home loan provider might say that, give us a percentage of the loan amount as a fee. So this actually happened to a friend of mine. He was being repriced 1% downwards and he was being charged 2.25% as a repricing fee. Let's see what happens in that scenario. So I've kept all the other parameters same. So, the interest save in 12 months and 24 months remains the same. What is changing here is a repricing fee. Now the repricing fee of 2% on roughly an outstanding of 18 point something lakhs in after 3 years, because I've taken a 3-year example. So it is working out to 37,000 rupees. 37,000 rupees. Now what happens? In the first 12 months, you're negative 18,000 rupees saving, because you paid the bank 37,500 and every month you're slowly accumulating your savings, which is 19,245. So you're still negative after 1 year. It is almost towards the end of the second year that you start making some money over the repricing fee that you made. And then if you calculate the monthly save, that is the utility, it's only 85 rupees. So when the repricing fee is charged as a percentage, please do be careful. There are some other points of caution also which you need to know, because this example looks good, but it is only an example. Every home loan is different in terms of loan amount, rate and tenor. Hence, the calculations will differ for each person. Your home loan provider will typically be able to give you interest and tenor saves. They normally give you the total interest save, which, as I showed earlier, it wows you, but it may not be the actual utility that you're getting or the actual benefit that you're getting. So if possible, do ask them for per year interest save or for an amortization chart. They may or may not give it. But if you get it, you'll be in a better position. Otherwise, you can do a similar calculation to this and use it to make a decision. So do an approximate interest save and then take a decision. And like I showed you earlier, be especially careful when you're charged a percentage of loan amount as the repricing fee. So I hope you now got an idea on how you can analyze the benefit of repricing your home loan with a lower interest rate while paying an upfront fee for it. If you have any queries or comments, please do leave it and I will be happy to get back to you. You can also reach out to me at my contact points, which I've left at the end of the video. I hope you enjoyed this video. Stay subscribed. Thanks for watching.